Thanks, Chris. Let's go behind those numbers now, as usual, with Scott Phillips from Motley. Scott, good evening to you. And as Chris mentioned, the jump in CSL, but it was another local pharmaceutical company that took the top honours on the ASX.
Tomo, good evening. Yeah, a good day for the ASX, a good day for CSL, but an even better day for Clinuvel, a company you won't have heard a lot of. Shares up 11% today. That's impressive, but they're up 18% on Friday already. For a three-day gain, the best part of 30% when you compound those numbers. A really, really impressive result. Sometimes you do get this second or third day impact when investors or brokers finally look at the results again and say, hang on, we missed that the first time around, or simply put out broker notes and upgrade the company, recommend it as a buy, and often you do get that echo of buying, and that's certainly what happened today.
Scott, let's talk about the ASX. A winning streak of 11 straight months is impressive, but even more so when it's the first time in 78 years that it's happened. Put it into perspective and give us your thoughts on what happens next.
Really good question, Tomo. Perspective is the right word, because you wouldn't imagine that the first time ever for 11 straight months of gains would happen in the middle of a once-in-a-century pandemic. But here we are. Now, of course, part of that gain is because of the damage caused by the early months of that pandemic. Of course, March, April, May last year, the share market lost 38% from the top in February to the bottom in March. So to some degree, there was some degree of just simply coming back from what was, I think, an overreaction by the market. But again, you know, the first time in 78 years, or in history, depending on which way you do the numbers, is a remarkable performance. Now, looking forward, the real risk, I think, for the stock market is what's been revealed in some of the management commentary this earnings season. Really, really good results for the last financial year. Basically the echo of that boom we got from the bounce back, both economically and in the market. But a lot of retail numbers over the last few weeks have been really, really soft. Some big retailers having double-digit declines this July and August compared to this time last year. And of course, GDP numbers out tomorrow. It still remains to be seen what happens to the economy next. We certainly have rougher waters to sail through before, I think, we get to cleaner air.
All right, now it's hard to keep Twiggy Forrest out of the news. The cashed-up miner is in an arm wrestle with BHP tonight for a Canadian nickel provider.
It's fascinating, isn't it? Fortescue, of course, built, and Twiggy built their fortunes, their mutual fortunes, on iron ore. But Twiggy recently has been doing everything but. Talking about green hydrogen, of course, wanting to be in the energy revolution. And nickel is, of course, a really important component of battery technology. And so Twiggy looking forward, and it's fair to say too, I think, given as an iron ore business, Fortescue, and the iron ore price probably come off a long way from $220 US a tonne, probably further to fall as well. If you've got the extra cash, and we know Fortescue's got about $8 billion of it, you'll be looking for somewhere else to put that to probably diversify the business. Interestingly enough, both BHP and Fortescue looking to invest in this Canadian nickel miner, but neither trying to take the business private, rather have a controlling stake but leave the company listed on the Canadian Stock Exchange. At the moment, Twiggy, with a blocking stake in the company, has the upper hand.
Scott, we have impressive current account figures out, and they could have a positive bearing on tomorrow's important economic growth numbers.
Yeah, fingers crossed, because these GDP numbers are supposed to be positive. We're almost certain that the current quarter, the numbers for which we won't get for 3 months, is going to be negative. If there is a negative shock for the June quarter, we'll effectively already be in recession. That's the key one. Today's current account surplus, as you said, a record $20.5 billion, almost 4% of GDP. That's the iron ore story we just talked about writ large. The dollar value of iron ore exports with a record high iron ore price really, really helping both the government's bottom line and the GDP numbers as well.
And finally, how's Wall Street looking?
A slight gain on the US futures as we speak, Tomo. Of course, we know anything can happen overnight, but if they close the way they open, around 0.1% is the current gain we're looking for. Hope that leads for good news for us tomorrow morning as well.
Scott Phillips, thank you.